What's up, y'all? My name is Mark Russell. I'm a financial wellness board member with National Debt Relief. I have over a decade of experience working at some of the largest financial firms in the world. And it's my goal to make very complex financial concepts that you hear every single day. I want to make them easy so you can transform your financial life. And you might be wondering, why am I so passionate about this? Even though I was doing okay as a financial advisor and stockbroker working for, again, some of the largest financial firms in the world, I still found myself in a significant amount of debt. At a certain point, I was $80,000 in debt. So I know firsthand how stressful debt can be. However, at one point, I had enough and said that I needed to turn my financial life around, so I did that. Now I'm proud to say that I'm 100% debt-free, and I'm on a mission to help others change their financial life too. This hobby has become my passion, and you might have seen a lot of my features in Time Magazine, CNBC, or even Forbes. I've even been nominated for multiple financial educational awards, and now I'm here to teach you how to be better with your money. Now, there are three things in life that are certain: birth, death, and taxes. Today, we're not going to talk about birth and death, but we will talk about taxes. The 2025 tax season is coming up, or maybe already started by the time that you're watching this video, but it officially opened up on Monday, January the 29th. That means that it's the perfect time to get up to speed on the do's and don'ts of tax season. Trust me, I know filing your taxes can be stressful. And with so many different rules to follow, it can be pretty easy to make mistakes. From missing a deadline to overlooking deductions, small mistakes can cost you a lot of time, money, and peace of mind. But don't worry, with a little bit of preparation, the right strategies can easily make the most out of this year's tax season. To get you on your way, I made a list of 5 most common tax mistakes to avoid like the plague. So I want you guys to follow along, and let's make this year's tax season your smoothest tax season to date. And you can let me know below in the comments, which mistakes have you made in previous years? All right, let's start with the first and maybe the most obvious mistake people make when it comes to filing their taxes: filing late or not filing at all. Not respecting a tax filing deadline is a common mistake that can come with very expensive penalties and even added interest on unpaid taxes. Also, some people mistakenly think that they don't need to file if they don't owe anything, which couldn't be further from the truth. Always make sure to adhere to the tax filing deadlines so you don't make paying taxes any more unpleasant than it already is. Here are a few tips to stay ahead of the tax deadline. Opting for e-filing. Filing electronically is faster and often more accurate than using paper forms, reducing the chance of mistakes and delays. Next, setting a reminder on your calendar. Tax day usually falls on April 15th or the next business day if there's a weekend or a holiday. Why April 15th? Who knows? But that's the date that is typically the day that you have to file your taxes. Add this date to your calendar and set multiple reminders leading up to that date. That way you can make sure that you don't forget. Request an extension if needed and do so on time. If you know ahead of time that you can't file on or before tax day, use Form 4868 to request an extension. Just keep in mind that an extension only gives you more time to file your return, not to pay your taxes, because Uncle Sam says, "I need my money." Find out more about this form via the link in the show notes. Mistake number 2 is misreporting your income. Overlooking income from things like side gigs, freelance projects, or investments is a common error that can lead to some pretty serious consequences, like an IRS audit, which I don't fear many things, but I fear the IRS. Remember, the IRS gets all the copies of your W-2s, your 1099s, and other income forms, so leaving out any income usually won't slip by unnoticed. Here are a few tips to make sure you get it right. Number 1, I want you to stay organized. Use a tracking app or spreadsheet to log all your sources of income throughout the year, from your main job to your side hustles. An Excel sheet or a budgeting app will do just fine. Number 2, verify your forms. Wait until you receive every necessary tax document from your W-2 to your 1099 and other income statements before filing a return. Your employer has to send you a W-2 form no later than January 31st of each year. And also, don't forget your income source. Earnings from gig work like ride sharing or selling on Etsy need to be reported too, even if you didn't receive a 1099. So please be mindful of that. And while you're at it, double checking every detail on your form, including filing status and personal information to ensure everything is accurate. Thoroughness pays off when it comes to your taxes. All right, on to mistake number 3, overlooking deductions and credits. Not taking full advantage of your deductions and tax credits can cause you to miss out on a lot of money, since They both can significantly lower your tax bill. Overlooking deductions like student loan interest or medical expenses and credits such as the child tax credit or earned income tax credit can mean paying more in taxes. These valuable tax breaks can save you a significant amount of money if you claim correctly. Let me give you a few tips on how to make sure that you won't miss any deductions or credits. Learn about all the deductions and credits available for your income level and filing status. If you're filing jointly, had a household, married filing jointly, even those small deductions, they really add up. Next, I want you to use tax tools. Software like TurboTax or H&R Block can help you spot deductions and credits, especially the ones that you didn't realize you qualify for. Tools like these are helpful in lowering your tax bill. I also want you to keep good records. Hold on to different receipts for different deductible expenses such as charitable contributions, educational costs, or home office related purchases. If you haven't done this over the past year, keep this in mind for the upcoming year. Taking time to explore and claim every deduction and credit you're eligible for can make a big difference in your tax bill. And remember, if you feel a little overwhelmed by all the tax credits and deductions available, you can always look for help in the form of a tax expert. Plenty of people out there are willing to help you with your returns. Now we're on to number 4. Another one of the most common tax mistakes is not tailoring your tax withholding to match your financial situation. Withholding too little can result in an unexpected tax bill by the end of the year, something that no one wants, of course, because who wants to pay more taxes on purpose? On the other hand, though, withholding too much essentially gives the government an interest-free loan with money that could have been in your pocket throughout the year. Because the last time I checked, the government is not giving us any interest-free loans, so why would we give one to them? So you might be asking, why aim for a low tax return? Well, it feels great to get a lump sum of money during tax season. It's better to have that money throughout the year. With a more balanced withholding strategy, you can put that extra cash towards savings, paying down debt, or investing instead of letting the government hold on to it for you. Here are some tips to get your tax withholding right. Use the IRS withholding calculator. This tool helps you adjust your W-4 form based off of life changes like getting married, having kids, or taking on a second job. Just a few minutes with this calculator can help you avoid surprises come tax season. So I want you guys to check out the link in the show notes. Next, I want you to review your tax withholding annually. Life doesn't stay the same year after year, so your withholding probably shouldn't either. I need you to check it every year or anytime your financial situation shifts to make sure that it is accurate. Make it a habit to update immediately after big changes in your life. You get a new job, you get a raise, you get a side gig. These changes can impact your taxes, so update your W-4 as soon as possible to avoid any withholding mistakes. Balancing your tax withholding can keep you in control of your money, ensuring two things: making sure you're not caught off by a big bill and not letting valuable cash sit unused for months. When done right, it's a simple step towards better financial health. You want to know more about this topic? Then check out the free to read blog on National Debt Relief's website. I share a few more tips and some background information on this topic in this blog. All right, let's move on to number 5. Overlooking retirement contributions. Please, guys, I need you to take advantage of your retirement plan contribution deductions, and I need you to not forget to report your contributions correctly. Failing to contribute to your retirement accounts or forgetting to properly report those contributions can lead to missing out on some significant tax benefits. Contributions to traditional IRAs normally lead to some deductions, but you have to be under a certain income threshold. But with all 401k contributions, every contribution that you make to your 401k is a deduction up to a certain amount every year. The benefit for you is that you're reducing your taxable income. And you might be wondering, Mark, I get it, but why is this important? Well, every dollar saved on taxes through retirement contributions is another dollar that you could put towards your future. So the IRS is basically saying that, hey, we're not only going to give you a deduction for the contributions that you're putting into your 401k, for example, but they're also saying that we want you to put money away for retirement down the road. Plus, building up retirement savings early gives your money more time to grow thanks to our friends over at Compound Interest. A win for both your present and future financial health. Here are some tips to make the most out of your retirement contributions. Contribute early and consistently. The sooner that you contribute, the longer your money has to grow. Aim to maximize contributions to your retirement accounts if your budget allows. For 2024, the annual 401k contribution limit is $23,000 or $30,500 if you're 50 or older. For IRAs, the limits are $7,000 and $8,000 respectively. Even if you can't max out your 401k or your IRA, any amount helps, and it still might reduce your taxable income. Also want you to take advantage of your Savers Credit. If you meet the income eligibility requirements, you can qualify for a Savers Credit, a credit worth up to 50% of your retirement contributions. This double tax benefit can make contributing even more rewarding. Check if you're eligible for this using the link in the show notes. And I also want you to keep track of your contributions. Good record keeping is essential also when it comes to your retirement contributions. This ensures you claim the appropriate deductions and avoid errors when filing. And just when you thought you heard enough, I got a free bonus tip for you. If you missed the deadline to contribute to a retirement account for the current tax year, don't worry, you can usually make IRA contributions until tax day the following year and still count them for the prior tax year. By contributing to your retirement fund early, you're setting yourself up for a comfortable future while enjoying the tax savings today. It's a small step now that can pay off big later down the road. Please remember, tax season doesn't have to be overwhelming or costly. By staying organized, filing on time, and taking advantage of available credits and deductions, you can reduce your tax burden and keep more hard-earned money in your pocket. Whether it's optimizing your retirement contributions or adjusting withholding or double-checking your income, these small steps can make a big difference. For even more insights and tools on how to maximize your tax season, check out National Debt Relief's free resources. With the right approach, you can take control of your taxes and set yourself up for financial success. Also remember that if you happen to be struggling with your debt, as we speak, debt relief companies like National Debt Relief are here to help. Next to helping you take charge of your finances on your own, they have in-house debt experts ready to help you. Because each debt situation is unique, it's always a good choice to consult with a debt expert if you want help finding the debt relief options that are most suitable for you. If you have any questions or like a free, no obligation debt relief consultation call with them, visit their website at nationaldebtrelief.com. If you happen to have any questions regarding any other financial related topic, check out the other videos in the series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you on the next video.